Welcome to my daily report market videos with me, Richard Perry, market analyst at Hantec on Friday the 17th of May. We've had a positive look to the markets in recent days, slightly slipped back a little bit today, but generally speaking we've seen a brisk recovery, and that's certainly been shown through on the Wall Street indices, where S&P 500 is back above 2860, seen as a bit of a key pivot. You've seen strong gains coming through on the DAX. You've also seen a move backwards on gold, slipping back below 1300 now, back below 1290, and a degree of dollar strength coming through as well. Now, all these moves around have sort of certainly taken hold off the back of that announcement that the US is going to be delaying the autos tariffs, and that has sort of put a bit of good news back into the market, and that certainly helped sentiment, and we can see that through the VIX. Look, that VIX volatility index has fallen back quite sharply in recent days. A little bit ticking higher today, but as yet nothing really to significantly change the outlook, and it certainly looks as though that the risk recovery is still on to an extent, although, as I said, the markets have dropped back a bit today. In terms of Treasury yields, we've seen the Treasury yields just stabilising a bit in the last couple of days, and again that reflects the fact that risk appetite is improving. We've seen the yen, which has come back towards that 109.70 mark. I'm taking 109.70 to 110 big figure as a key gauge. I'll talk about the technical implications of that in my chart analysis in a bit, but there are certainly some interesting moves that we are seeing in these markets at the moment. Now, in terms of data points today, we've got final Eurozone inflation at 10 o'clock, and then the Michigan sentiment at 3 o'clock. Now, final Eurozone inflation is expected to be reiterated at 1.7% on the headline and 1.2% on the core, so no change from the flash reading. And then we've got the Michigan sentiment this afternoon, 97.5, so a shade higher than 97.2 that we saw last month. Now, my chart of the day is Kiwi dollar. Interesting chart, certainly given the fact that the Reserve Bank of New Zealand cut interest rates recently, and that put the Kiwi under pressure, and that downtrend channel that we've seen building over the past 6 or so weeks has decisively now taken the market below this pivot line of 65.90. His downtrend channel is now finding resistance at 65.75, lower highs, lower lows consistently. We've got negative configuration on momentum indicators, stochastics falling away, still with downside potential there, downside potential still on RSI. We're testing the 65.25 level from a couple of weeks ago. This morning we're testing that level, and a breakdown below that would open the next real reaction lows of October, November, and that starts to come in at 64.20, 64.60. So I think further moves to the downside are likely, and given the fact that the dollar has started to regain some strength in recent couple of days, I think this is any rebound on the Kiwi dollar chart is a chance to sell. So it certainly looks as though we've got further weakness in that chart there. We've got a configuration which is negative on the hourly chart as well. So as I said, any sort of unwinding move back towards maybe 50 to 60 on the hourly RSI is that chance to sell. You can see here on the hourly that the rebound to 65.50 area has been a bit of a pivot in the last couple of days. Resistance area forming there. So I think that is your selling opportunity. Now we've got the reaction high at 65.80. That is again around yesterday's high. Bearish outside day, bearish bearish engulfing candle there as well. So resistance building overhead. I wish you good luck in your trading today, and I will speak to you later.